Good morning, 8:41 a.m. Pacific Standard Time. The date is 2/21/2016. The day is Sunday, and we're taking a look here at calendar 2013 on the S&P 500. And pretty much we had a 230-point reversal from the highs. And with this current rally up here, we are only down 120 points on the S&P. This neckline up here at the 1950, which we talk about as strong resistance, is that when they first hit our target at 1940 on this daily chart, we went all the way back down to the neckline, slightly above the 1800 double bottom pattern. Once we rallied, it gave it up. Now we've had a 1, 2, 3, 4, 5. This is where the positive started out. And so far, this area of resistance on the daily is holding that resistance from the S&P going higher. And so what we're looking at right here on the last trading day, we closed at right around 1970 here. We're above the 20-day moving average here. And this blue line here is a 10-day simple moving average on this daily chart. So I'm going to draw another trend line here very quickly. And we're going to take a look right here is where this support level is going to be on this high bar. If we were to break on a closing level below there, the next would be down here, right around 1871. 1867 is the key for the S&P in the short term. One of the other things we're going to do now is we're going to work with what we call a weekly chart on the S&P 500. And just remember, earnings season is starting to wind down, and that's a whole different can of worms. But the S&P 500 on a cash earning basis was too high to start with. And when we bring the multiplier down, we had this whole last week was 4 days. The blue line, so you know, is 1942 on the S&P as resistance. The 2000 mark up here where the 20-week and the 100-week moving averages are is where these markets would ultimately totally collapse again. So I'm just going to pull up this area, and I want to talk about the green line. That's a 200-week simple moving average right there slightly below that 1800 level on this weekly chart. And so the wall of resistance is going to go across this trend line, and 1950 is resistance. And in order for us to get back to 2050, we would have to close above the 1950 resistance level across here, and we would have to have a daily consolidation. And basically, the bear trend is currently in here because when I blow the 20-week up, the baseline is 100-week at 2009. The 50-week, which is the white line up here, that 50-week is at 2038. And we've totally broke down like we said we would. One of the other things that we're going to just talk about is we're going to go to a monthly chart right here. This is January 2016, and they came barreling right back in. Now, if we go way over here to 2014, this is where that major support line was, and we popped. When we had a sell-off, we popped. And all of the weekly moving averages were ascending in value, and they definitely contracted. And one of the things that we're going to talk about is the blue line right now. I'm just going to blow this up. is crossed over the 20-week moving average, the red line. And we're going to take a look that there are mathematical equations. When you start looking at 2023, that 10-week is there. The problem is between the 20-week and the 10-week is the upside move resistance is going to be very strong, extremely strong. And like I said on the monthly, this is very significant. And we deal with moving averages. There's a mathematical formula that we do look at. And the 50-week, which we never got to, this is the neckline. This is the resistance, 1950. So we're looking at the S&P 500 put options. And we clearly have an expiration weekly coming up. And when we want to take a look at the 1930 put option, is that here, I'll bring it up in a weekly format. So let's get this out of the way. This is going to be the options that we trade. It's a 1930 call. And on this chart right here, we can see that these contracts were up here in the $80 ranges. We can see that $40 ranges, and we can see the complete breakdown right here, which I'm going to blow up this part. This is a 1930 call, and we're going to be watching it because that's the bottom of it. And here it is up here, slightly above $20. And then this weekly wick is down here now, and it's $10.45, let's say. So it's going to be the key resistances is that we're going to be looking at in call options on the S&P is actually the 1930 level, and the wall of resistances here on this monthly chart. We could come back over here at these lows. This would be the reversal right here from 1950 resistance down to this trend line here is going to be where they had come in and popped this market. But every time they did it, you can clearly see here how 1940 was a resistance all the way back down here. And we did make a lower low than January. It's still on the record that it is a lower low. So I'm going to conclude the S&P, and the bull has a lot of resistance, and the bear is very strong on the pullback. So once again, when we take a look at where these S&P 500 index is that it's going to be ultimately, we're watching that 1930 and 1950 is going to be extremely resistant, and we're going to trade the S&P 500 index options and make a lot of money.